All right, how's it going, everyone? This is Anon. No, this is financial advice. This is for entertainment purposes only. You guys will have to let me know if you can hear me. It's been a while since I streamed, and I need to find out if everything is up and running. So let's take a look. I can hear you in my left ear, but not in my right. Just in your left ear? How's it going, guys? Alright, so I see Earthium, CJ. What's up, Andrew? How are you guys? I'll just put up some of these. Slightly down in after hours. Not actually that. Another 3% down in after hours, but that can be moved all around. So, all right, let's take a look at everything. Did you hear about AMC earnings? No, I did not. Let me take a look at AMC. They dropped 3% after hours. What's up, Jay? What's up? Did I hear about AMC earnings? Let's just take a look. It looks like revenue was a beat, and so was earnings per share. Let's see. And their partnering I saw was Zoom. I saw that headline. I didn't actually take a look at the numbers yet, though. For AMC, so we'll have to take a look at that at some point. Let's see. CJ said, do you think they're going to answer me on Twitter? Probably not. I mean, if you want to get an answer from somebody, you can always write investor relations. It really just depends, you know. Like, I've had pretty good luck with when I contact investor relations. I just say, hey, I'm a retail investor. I have these questions. And most of the time, they get back to you at some point. So, I mean, if you saw the Aterian chat inside our Discord, you would think that, you know, the stock was trading at a penny because everyone seems to be super bearish now. Random. It wasn't me. Like Shaggy, it wasn't you. All right, so let's take a look. Let's see what's going on. Carl said it was me. It was the one-armed man. Pretty bearish too, but go Giants. All right, can you guys hear me fine? Is everything's good there? Let's go ahead. Oh, Carl's KP, Miko. CJ, are you the Giants guy on there? Formerly Philadelphia sucks. You guys change your names so often, it's like hard to like actually remember who's who. Zeg seems interesting to me. Yeah, so let's just cover a couple things because I know most of the people on here are kind of taking a look at, what's going on here? What's the big picture? We actually have something to talk about now. For the longest time, we really haven't had a ton to talk about with Aterian because we didn't know the numbers, right? So let's just take a look real quick. Let's see. Yeah, I mean, listen, like, you guys are all entitled to your opinion. Like, I'm not super happy, obviously. I think dilution was a big kick in the pants because they didn't need to do it. I understand why they did it because they wanted to make an acquisition, but like they could have waited till after earnings, in my opinion. But my guess was they basically knew that earnings were going to look bad on paper, so what they did was they just said, all right, we're just going to bite the bullet now. Like, now that I actually know the information, I kind of understand a little bit more why they did it, because they were going to get nailed with that impairment. So, like, yeah, so, like, I think they need to do some soul searching and figure out, like, okay, this was a business model that worked when everything was going perfectly for them. This was not a business model that handles very well when shipping rates go up 4 or 5x, right? So, like, the business was set up to basically go through and, succeed with a certain shipping price. Chinese goods were cheap at the time. They go and buy them, ship it to the East, the U.S., and then they basically, sell them across Amazon, different, e-commerce platforms, But, they ran into obviously a really, really, really unfortunate circumstance. And now, yeah, the shipping rates were basically just the shipping companies. So the shipping companies are basically, like, I think there's 4 of them, and they're all Asian companies, and they basically just price gouged. They just straight up said, okay, we're going to charge now 4x, and they had record profits, and there was no options. Like, they literally, were basically dictating the price, and you had to pay it because all of them colluded basically together to make sure that there wasn't one that was cheaper than all the rest. They all raised their prices like in tandem with this crisis. And it finally took, I guess the administration, the U.S., I think Biden and the Office of like Commerce and some other things got together and basically were like, okay, if you guys want to do this, then we'll cut off all your shipping and we'll find competitors and we'll do it out of the U.S. And all of a sudden the prices came down. So, Carl said shipping costs is BS. Cost is down and they haven't moved to new product. Well, they have to sell through their old product. That's what they were basically talking about on the earnings, if you didn't listen to it, Carl. If you haven't, I'd recommend you actually listen to what they actually said during the call. So what do you guys think? Like, I mean, there's 20 of you in the room. What do you guys think as far as what do you want to talk about? What do you want to cover? I mean, all the things are still there. Like, there's still a possibility for a warrant run. There's still, like, the company's not, like, dead in the water. Basically, the reason why I don't think the price moved that drastically after hours is because, honestly, I think most people are out. Like, the majority of people who were in this stock, mainly the 2 institutions, they're already out. So all that's left now is basically, like, trapped retail, some longs retail, you have some longs in the company, and you have some, like, BlackRocks and Vanguards and some hedge funds. Like, everyone else that's already, like, was short on this was already getting out. And there's a lot of short covering happening now. So basically, for them, they're already at $1. Like, you can only make $1 profit shorting at this point. So it makes more sense to run the stock up if you want to short the stock. If you're like, if you think it's going to go down, it makes more sense to push it up, make money on that side, and then reshort it. So there should be at least some movement on the stock at some point in the next, let's say year. For some people, that's not enough. They're impatient, and that the money's at this point right now tied up, and it is what it is. Like, we don't know when they're gonna push this thing up. So right now, this is what it sounds like. It sounds like Aterian has roughly 46 million to start the fourth quarter. We don't know how much they paid for this acquisition. So say it cost, I don't know, like $3-4 million for the acquisition. I'm just making up a number, right? So then you've got like $42 million left for, going into this new quarter. So you have a cash burn right now, roughly, let's take a look real quick and see if we can figure out the cash burn. Because they're not profitable, so that's why we say cash burn. So, all right, so cash burn, let's pretend we have it down. Let's just say it's roughly about 10 million a quarter, right? Like 10 to 11 million a quarter. Let's just say it's that. So if you're having a cash burn of about 10 to 11 million a quarter, and you've got about, let's say we've got about 38 to 40 million left. Let's just pretend we know what they've spent on the merger. We could even say 40. That means you would have at least, if we're saying 10, if it's 11, that's about like a little bit, it's about a year, a little bit under a year. And if it's 10, then it would be about a year, right? Let's see what you catch up with the comments. New product can offset old crap. Yeah, so basically what they're trying to do right now is they're basically, just so I want everyone to kind of understand what's going on with this company. So they paid 5 times the amount they should have on shipping costs, right? So they still wanted to sell things, so they wanted to keep revenue coming in. So instead of sitting there and going, well, we have to raise the prices on all these things like tremendously just to make profit, they decided they were going to just continue to sell through. So they were selling product that was 5 times more expensive. So they're basically losing money on each product that they were selling, right? Because they couldn't shut off the spigot on like, oh, well, we'll just not sell these things at the time. So they sat there and they bought this inventory basically, and it's sitting in warehouses. They're paying, money to keep it stored in Amazon and all this stuff. And then when they sell through, they're basically not profitable. So like this entire time, this company is not profitable, right? So the problem, though, is because you have this really expensive inventory as you're selling through it and taking losses on it, basically, your margins are horrible. So, like, your cash coming in is nowhere near what it should be. Now, what we would like to see is as they sell through this inventory, right, and they start replacing it with cheaper inventory because the shipping rates have gone down tremendously, now all of a sudden your margins get better. So every time you sell something, you actually could possibly even make money, or you're not losing as much. So that's why, I want people to understand that concept because it's important to Aterian. Because they're an e-commerce realtor, but you can't like also not sell things, right? You can't just be like, oh, well, nobody, or the things are really expensive right now, so we'll just sit on this. Just reading through you guys complaining. So Random said Carl's hired. Carl is going to go work for Aterian and tell him what's up. Hey, I'd love to send a bunch of really smart people over to them and say, fix this, because we have a lot of people that are obviously invested in this company and we would like it to go back up. All right. So that kind of explains what's going on, right, with the inventory sitting there. It's really, really expensive, and they need to sell through it. So basically, Yaniv and the management team said, we want to basically capture more market share. So what they're trying to do is they're trying to lower prices to entice people to buy their products on Amazon and, all these different e-commerce sites like, Walmart and was it Spotify, a bunch of different ones. So what's going to end up happening is they're going to try to drop prices, get people to buy them. Hopefully the products are good, people like them, and they're become customers of that brand. That's what they're hoping for. And so next time they go and buy a dehumidifier, they say, I want to buy a Home Labs, humidifier. If they want to, buy something for the kitchen, they choose Spiralizer over some knockoff brand, that sort of thing. So, they're going to try to sell through these items at a discounted rate, capture market share, take away, so. You guys in the chat are on AVYA. I'll get to it, Asma. I just want to finish kind of the Aterian thing. So here's the biggest thing we need to know, right? Let's just say we've got between $37 and $40 million going in right now, right? Because it's been it's been a month or so based off of when they basically had that cash to start with, the $46 million. We know they spent something on a merger, so they're going to have somewhere in that ballpark. So the question is now, when is this thing going to start moving? What are we looking at in the short term, right? So I know a bunch of people had looked at DZ's TA, and I actually think it looks pretty solid as far as the TA goes on it, because let me see if I can pull it up real quick. Here we go. If I can get this to work, DZ. Where is his? What was it called? Something stack? Here we go. OpenStack, that was what it was called. So I'll bring up DZ's stuff here. All right. So basically what he identified is this descending wedge that we've been in for, forever, it seems like. Basically, since the last run-up, we've been basically coming down into this descending wedge, and it all fell on earnings, right? So, earnings was not great. It wasn't horrible either, and that's also why you didn't see much of a move. Like, in the after hours on the Aterian, it only went down, was it 4 cents? Yeah, 4 cents. So that's 3%. We don't know who they bought, Carl. We at this point, they're not going to tell us. They basically said that they bought somebody that's in the same area as them. They don't want, like, obviously antitrust or any, like, if they bought too much of a market share, then they could be accused of, price fixing and all these things. So, like, they're not giving us any of that information. All we know is it's some sort of health care or health systems, whatever it is, right? So his hypothesis basically is that Aterian runs after earnings at some time, immediately tests the 50-day moving average, right, which would be up here, and then it would be, I guess, roughly a move to, where's the 50 on this for him? 170, which would fill roughly the gap here, left up here, which would make sense. And I don't think that's out of the question that at some point in the near future we could, near future could be a couple months, but we need to fill this gap. This gap up here, gaps fill, and there's a gap up here. There's tons of gaps up. There's not many gaps down. And at this point right now, you have to kind of think about this long term. As far as, like, let me pull up Fintel real quick so you guys can see something. So with Aterian right now, they have about 17% institutional ownership, I believe, roughly. Now, we're going to see more by the 14th because I think all 13Fs have to be filed by the 14th, I think that is. Ooh, Elon sells almost $4 billion worth of Tesla stock. Ooh. Ouch. I don't know if you guys saw that, but oof. Okay, let's see. All right, so ownership, let's go to institutional owners. There is roughly 18% that have been filed so far. And if you look at them, if we go by shares, you're looking at, so 4 million right there, about let's just say 2.4 roughly. So this Vanguard and this Vanguard are the same. Because if you look here, this is an MP. This MP is a port which goes to this 13F. So if you ever see, you don't want to double count things, just so anyone that looks at these in the future, if you see an MP, that means that this goes to something else. This goes to basically the Russell shares. All right, so IMW, that's the Russell. So somewhere on here would be the Russell here. It's probably this one linked to this one. Do they not have to file that? Normally you would see something above it, unless... Oh, it's BlackRock. It's a child fund of BlackRock. That's what it is. So these shares right here go into this one right here. And so yeah, these MPs right here, these two go into this 4 million. So just wanted to show you guys that so nobody gets confused and double counts something and be like, oh my God, they did the math wrong or something like that. No, these NPs go to, so if you look on this, it says that this is a child fund of BlackRock, and this one's a child fund of Vanguard. So BlackRock must have other MPs here that feed into this 4 million. So if you go down the list, you can see who has the most, right? So supposedly Susquehanna still has a ton more calls than they do puts, because here they're puts. They basically have over double the calls than they do puts. And they also own shares too, which is here. So you do realize that BlackRock, Vanguard, State Street invest in everything. Yeah, I'm aware of that. And that's why I said, like, I don't think at this point right now the stock has moved a lot because these guys just hold these shares. They're not going anywhere right now. Like, I don't think they're going to be dumping out and buying. Like, Vanguard sold a little bit, like 6% down. But, like, overall, no. These ones right here, State Street right here, I think they're just slowly buying and just holding because they buy everything. So I'm not saying that it's great because these things are, these are serious. BlackRock and Vanguard, and they just buy a little bit of everything. But my point is, if you look here, right, pretty much everyone else is out. And these ones are not active funds that are like buying and selling tons of shares. So, like, I think at this point right now, the reason why we didn't have a major move down is because most people are out. Like, at this point right now, it's just the shorts and the longs. And, like, most shorts have been closing their positions. Because if you go here to short interest here, the short interest now has gone down tremendously. Right? So we used to be like number 1 on the short squeeze score. There's now close to 2 million shares available. 10% borrow rate instead of 20. And if you look, they're not shorting a ton anymore. Right? There's a little bit this day right here. It's probably because we got a little bit of volume, but I don't know what's happened that day. But for the most part, there's not a lot going on. So, like, there's about 7 million shares, roughly, right? Which is about 14% of the float. So, what I'm looking at here is I'm looking at a stock that's got about 15% short interest, and most of the stuff when it was up to like 40%, short interest or, like higher, that's all been closed. So it looks like at this point right now, there's not a ton more downside. Like it will still move because there's no volume. So if they want to push this down, they can push it down. But there's nothing left to short is my point. So like there's limited risk reward. Like at this point right now, they can go for the company going out of business. But at the same time, if the company doesn't survive, that puts them in a bad spot because they would much rather short at like $4 or $5 a share than short at $1 a share. Because if you short at $1 a share and it goes the other way and Aterian somehow recover, like if Aterian turns around in 2023, does exactly what they said they were aiming for, which is become profitable by third quarter of 2023, then you've got to close your positions. And so if the stock runs in between now and then, all of a sudden those shorts that you shorted at 1 are now underwater, and that's not great. So it actually makes more sense for shorts at this point to allow the stock to go up, and then at that point re-short down if they wanted to be like long short, or long short, I guess long bearish on Aterian is what I'm trying to say. Anyone got any questions? But I think that's why we didn't see a ton of like after hours movement, is just because, like, to be honest, most people are out. So the algo will just push it down. The next level to short down to is 50 cents. If you don't think that's happening, there's not too much downside for the shorts to use. Yeah, I mean, it's... So here's the deal, right? At 50 cents, so let's do this. Shares outstanding right now is 80 million, right? So let's just do the math on this. So if you have 80 million shares, right? And you take that by 50 cents, that gives you 40 million, right? Well, they've got 40, let's just say they have 40 million right now in cash. They also have another 60 in inventory. And if you look in their balance sheet, their assets are listed at about 100, like I think it was 90 to 100 million after all the impairment stuff came off. So, I mean, you're kind of scraping the bottom of the barrel there. Like, it's, you can short if you wanted to go for that, but that's like risky for a short, because at this point it makes more sense for them to run it up and then re-short it than it is for them to just keep pushing it down. And then if something goes wrong for them and all of a sudden Aterian actually is profitable, then, well, there you go. Here, let's pull this up real quick. Investor relations. Here we go. Yeah, so their assets now are listed at 161, but after basically everything's said and done, it was roughly about, I think, shareholder equity would be about 99 million, right? So after their liabilities, which have come down, which is good, right? So after that, you're looking at a shareholder equity of about 100 million. If you do that, that's about $1. So going down to 50 cents would be a little bit like, you're pushing it there. So, yeah, I mean, you've got, at that point, you would have more in cash. If they push it down to 50 cents right now, you would have more in cash than you would market cap, which doesn't make a ton of sense. Now, can it go down a little bit more? I had to, let's see. With a warrant and seemingly much of retail, Sun warrant price to a run short back, it's a far-fetched realistic. I'm starting to think they drive it down to induce a reverse split. I mean, that would be another way they would try to for the shorts. Sure. They would try to keep the price under $1, right? Buy friend's product, Ant, 25% overvalue, COGS at 50 cents. I mean, that's your opinion, Carl. You can go that way if you think, but I mean, to me, I'm thinking that they probably would push it up before they push it down. But I mean, if you think the shorts are just going to keep hammering it down, it's not wrong. They could go that route where they try to keep it down underneath $1 for a certain amount of time. I just think at this point right now, it seems pretty unlikely based off of where they are. They still have that money, and they still have Armistice is sitting there, I believe, with the ability to get I think 10% of the company. I think that's roughly what it was. They have the ability to, exercise all those warrants if they need them. And they did that once before. Like the run that happened, they ran the stock up. I shouldn't say they. It appears that someone ran this stock from 210 all the way up to 7, right? And then they pushed it back down. And because this is where they sold. So like you can literally like go through, see the 210 here, see it ran all the way up to 7. This is when they were basically exiting their entire position. But they were the biggest shareholders of Aterian, and they dumped their entire position up here. And then they bought more warrants on this company. So, I mean, you got a gap here, you got a gap up here, you got a gap here, and here, not including the gaps that are even higher, but those ones are more unrealistic at this point. But there's a ton of gaps to fill. So, and I think the more immediate one's going to be here, right? Right in there. Yeah, I don't disagree, Ben. I was going to say, I mean, at this point, but here's the thing. Like, this has been a very strong level of support. It seems like this area right here, basically from the 90s, and, it could break down a little bit more, but, like, you're getting some pretty fair value. You're basically paying below book value on something that could pop at any moment, because all it takes is going to be basically, hey, listen, we're already 15% short on the stock. If they keep pushing it down to get the price sub 1, I mean, you can see here. Tailored setting quantities. Okay. Thanks. I don't need that right now, though. Like, all it's going to take is one institution to be like, there might be something here, and start scooping up shares for like less than $1, and it's going to be hard to get that price to go down without them taking some risk, because shorting at $1 versus shorting at like $3-4 is ugh. It's easy to grin when your ship comes in and if you got the stock market beat, but if the man is worthwhile, it doesn't. Man who can smile when his shorts aren't too tight in his seat. Of course, it's support. Any lower, you're delisted. Yeah. Not beneficial for major investors. Yeah, but you have to remember, like, at any point, like, if they start showing any signs of life and institutions go, I can make money on this, institutions can actually move the price. Retail is not moving the price. Retail could go out and buy, 30 million shares tomorrow, and it would barely move the price. Because we just don't have the ability to actually hit the lit exchange. That's the honest truth. Like, the majority of retail investors do not buy through lit exchanges. They buy through their brokers, who internalize and then basically wash out all that. Think outside the box. It's not the shorts. It's the hedge funds. They're just, like, I've said this before. I think they use Aterian and stocks like this like a yo-yo. Josh Sloan guy. When for $3-4. I'm hoping sometime next year in the 2023. That's what I'm hoping. It's not the box, it's a soap. All right, hold on 1 second, guys. I got to use the restroom. All right. All right, I'm just catching up. So, is it Koji? Bring in the institution, jump in with a $90 million loss. I understand the impairment, but good luck. We have a better chance pinning one or sub one. Yeah, I mean, here's the truth. Like, there's going to be a long period right now that this thing's just going to be stuck around one. Like, it may dip down into the 80s. It may go up to, like, the 160s. Like, even maybe fill this gap up here and then come back down. I don't know what they're going to do. But, like, this is where the stock belongs right now based off of their balance sheet. Vlad Yanov stated that it's a competitive thing. There's no new SKUs coming in from this brand yet. Yeah, so the reason why they didn't disclose is because my guess is they bought in a space that they don't want to. They want to. I think Gamer said it pretty well inside the Aterian chat, which is basically you don't want to reveal that you own too much market share of any one thing because then you can be accused of price gouging and other things. It's the same thing that the shipping guys did to, if you all have, like, if you own 60% of the market and you start dictating the prices, right? Like, that's the reason why they don't want to disclose, because if they own too much of one space, then anyone that goes to them, basically, it's kind of like the eyeglass companies. You guys ever read up about this? There's all these different eyeglass companies, right, that make glasses. Except for there's not. There's only really two. So, like, there's two companies that own all the different glasses companies. It's an illusion that there's all this. They're all made in the same place. So they're made in the same exact place by the same exact people, but they charge different prices for different things. So they can set the prices. So that's why they don't probably want to, disclose that they own, 40, 50% of the market share of a certain, area, because they could be accused of, so that's my guess. I don't know. Like, I don't like it. I think they should just say it personally, but, I don't run a publicly traded business, so I don't know all the rules, and I'm not going to pretend. They don't make glasses, they make mirrors and sell smoke. Yep. All right. Armistice and the other longs are using this as an insurance policy. If that's true, then you would see a short position on them. So, Carl, show me that Armistice has a short position on Aterian. You should be able to go right into their filings and see if they have a short position, right? Because that's the insurance policies. If you're shorting a company, you would buy them those warrants long as just in case things run. Then you can just flip sides and make money, right? I love owning stocks like Aterian, GameStop, where management hides perpetually in the dark, effing over their shareholders. I mean, there's a lot of like, oh, well, we know what's best for the company. And it's like, oh, yeah, there you go. You want to go tits up, sell massive puts. You want to sell puts or you want to buy puts? If you want the stock to go up, just if retail just goes bearish on the Aterian, the stock will fly up because the market makers just burn them. Like, why not? If retail's all going short, boom. I mean, retail also at this point, like if you're already stuck, like I believe Aterian's going to a new transfer agent. Like at this point, just de-rush your shares. Like that's what I'm going to transfer the rest of mine over because at this point, they're just going to have to sit there. I did want to see something though. I wanted to see owners retail ownership. Is this thing still showing? Aterian is the top company? Or did we drop off now? No, it still is. Yeah, so right now, Aterian's still the top owned company as far as like reported retail ownership on Fintel. I mean, it's interesting. GameStop. I would love to know the actual number of shares though. That'd be a lot more helpful. They're saying that we own 3.7% of the entire float. So let's see. What is that? Do I have mail? Let's see. All right. Yeah, I mean, selling puts basically just means that you're willing to buy it if it goes under the stock price, so like the share price. All right. Let's see if we can pull up. I'm just reading people talking about AMC. AMC beats on earnings, goes down in after hours. I mean, you don't want the stock to run. If it runs and you leave a gap, then you just have to go back and fill it at some point. They can move the stock. Fact. Market drops, move ATER, increase value, cover for margin losses. Market moves up, make money. Yeah. I don't disagree. I mean, that's the reason why Armistice did it, right? All right. So like MMAT, let me see. Let's pull it up real quick. metamaterials. You guys have brought this up before. We've talked about them in the past. They were sitting down there in the dumps down in like the sub ones, and then they popped up, right? They now, and they had the MMLP, right? What was it called? It was like the preferred stock or something of theirs. Up 300% year to date, 500% over the last 6 months. All right, so they are going into earnings, right? They report tomorrow. Or is it today? No, it's tomorrow. So they will report tomorrow. Looks like roughly a earnings per share minus 5 cents. So let me pull up the Ortex on them, because I think that does matter. Ortex, let's take a look and see what's going on with these guys. Index rebalance. We're proud to announce our index rebalance data. We know what's going to happen before it happens. Okay, index on. Do you guys want to see this? Why do you think Aterian keeps going back to armistice? It's a questionable look at best. That I agree with. Full on desperation at its worst. My guess would be because I'm going to be honest with you. I think they must have some sort of relationship with those guys. They are only a couple blocks away from each other, and this was pointed out to me by somebody that was looking into this. They're both based out of New York. They're a couple blocks from each other. Apparently, Yanov used to work in the financial industry, so like it's very possible he knew these guys, and so it's just easy. Just like, hey, listen, we'll run the stock up, and you give us the warrants, we'll give you some cash to keep your business going. No biggie. And I think they didn't realize that, at this point, retail investors are starting to look at them and go, the hell are you guys doing? Like, let's be honest, like, it's not a good look. Like, one of your biggest supporters literally named Anon F the HF, hedge funds, like, and you go to a hedge fund and you basically allow them to manipulate your stock, and then you go back to them out of all things. Like, they've already did it once, and it's like, seriously? Like, you guys thought that was a good look. Yeah, I don't like it. But I think, that's why I think they did, is probably, my guess is there's some sort of connection there. Yeah. I mean, these are all valid theories. Like, I mean, obviously, we don't know for a fact for any of these things, but, like, would it shock me to find out that there is a connection between them and that these guys get basically, like, who knows? What I found is this. Money, what's this expression? Absolute power corrupts absolutely, or something like that. And one of the biggest things is money. Like, I mean, money can literally make somebody do something they'd never, think they'd do, right? Like, if you offer enough money to somebody, a lot of times they might do something that they would probably never have done, but the sheer amount of money might entice them to. Like, it is a tool, and it's a tool to basically keep people down. It's a tool to raise people up. It can be used many different ways. It can be used for good. It can be used for bad. It can be, like, money is a very, very powerful tool. And so what I've learned about the market is absolutely the wild, wild west. Like, there's the appearance of, like, rules and regulation, but there's really not. Like, I've reported things to the SEC and nothing ever happens. And never hear from them. And then every once in a while, I'll hear back from them, and they'll go, well, we're looking into this. And I'm like, okay, well, look, can you give me any? No, never any results. Never, like, they're understaffed. They're just, the plain and simple truth is that until they actually decide to do something, and they probably need to increase the size of the agency, and they also need to actually, do more than just slap a couple fines that are so small that you need to inflict pain on some of these people breaking rules. You need someone to be like, you know what? You broke this rule. We know you made about a couple billion off that. Well, we're going to charge you $2 billion. But it never happens because no one has the balls to stand up to Wall Street because they pay for all the politicians. And that's the honest truth. So yeah, like, I understand. All right, so let's get into this. So they're saying index rebalance. Vortex provides a description of the index, tracking value, blah, blah, blah. Here's index rebalance forecast. This table provides all the action, traded value. Okay, let's begin. Anyway, hold on, let's just go here real quick. I just want to see. Yeah, I mean, we've just been consolidating. Which one we were looking at? All right, have a good night, Carl. All right, so here's Meta, right? Or MMAT, sorry, Meta Materials. All right, so let's take a look at their short interest. Let's look at the overview real quick. All right, so they're saying about 10% of the float, which is roughly about 32 million in short interest. I'm guessing the utilization is probably high. Yeah. Cost to borrow is climbing a little bit, but it's pretty much, it's not that high. Shares on loan has increased at least a little bit. Let's see. So it's not on the threshold. FTDs are starting to go up. I'd be curious to see what this turns into when the FTDs get updated. I mean, it's not like huge, but at the same time, it's growing. You can see right here it's consistently between. This is when it was higher, so it looks like some shorts have closed, which is probably why the price has gone up, right? Because it was 40 million back here, 46 million at its peak, it looks like, and then since then they've covered about 15 million shares roughly, it looks like, which is also probably why the stock went, So it looks like there's been some short covering on this. I don't know if they'll get everything to cover, but, I guess it really depends. Like, what kind of volume are they getting? I mean, not a ton of volume, right? I don't see a ton of volume. Yeah, like with this one right here, I think we talked about this. This is the one where basically they like stored basically a lot of the short interest from the merger that was like shady. Gone. The only logic for shorts. What's the only logic, Ben? I mean, I don't know. Can we look up that ticker? Let's see. Let me see if I can find it. Hold on a second. Where'd it go? Here it is. It's MM. Yeah, I don't think they list that ticker out. So that merger happened. I'm just showing this on here. That merger happened back in roughly June of last year, right? So it's been at least a year there. So a year and a half before it really started to actually do something. The only logic for the shorts that haven't covered in the sub reverse split is sorry. The only logic for shorts that haven't covered is sub 1 reverse split. It's completely ignored in the Discord. They aren't aiming for 0. They just want to basically get it for whatever the reverse split would be. I mean, yeah, sure. Like you're squeaking pennies at that point, but sure. I mean, like the process to get, to have to go through a reverse split on something that's worth over probably $1. Yeah, they can control the price, the stock short term, but like getting it to stay under $1 for that long, because it takes a while, right, to actually qualify for getting like threatened to delist, and then you have to do a reverse split. Like, I don't know. I think at this point, I won't say it can't happen, but I'm just saying to me, I think that's a riskier play for a short because, pushing it down, sure, but keeping it down there for a long period of time, I don't know. Like, I mean, you're already at an $80-something million market cap on Aterian, right? So it's like, how much further can they push it before it goes like, maybe this thing's undervalued, and all of a sudden you have an institution swoop in and grab some shares, and that pushes up the price. And then you got to restart again to keep it delisted, right? To get it down, you have to keep it down there under $1, which means that then you're shorting more to keep it down there. It seems like a riskier play. Most hedge funds and stuff like that, they're not going to play with something that risky. Like, they'll do some, but like if they get any sort of resistance with volume, then it restarts the clock. How long does a stock have to stay? It's 10 consecutive business days, right? So they've got to keep the thing under there, but then at that point, they have like 120 or 180 days or something like that to get it back above there, and then it restarts the clock, and then you have to go 10 again, and then let's see. So let's see. After initial listing, if a stock's average closing price over 30 consecutive trades falls below $1, is subject to delisting. The average closing price equals the sum of 30 consecutive closing prices divided by 30. The only would you say 180? What's 180? 180 days, right? So like I'm just saying it takes a long time to do that. Well, if you map that out, third quarter, right? There's 365 days in the year. Like you're looking at like, so you don't think the stock's going to pop back up over $1 at any point and then reset that clock? Like it's, I don't know. I'm not saying it's impossible, and sure, I'm sure that some hedge funds maybe are looking at it like that, but like to me, I think it's too risky to do. I wouldn't do it if I was a hedge fund. Like you better be sure that this company's going to go out of business or be even worse shape, in 2 months. It looks like most of the stuff damage is done at this point. Is kind of my point. Like, look at this chart. Like, how much? Yeah, how much more can you go down at this point? The answer is $1.02 or dollar, right? It can go down $1 more. That's it. So like, but every time it pops back over there, it restarts the clock. All right. Does anyone else have anything they want to talk about? So here's the truth. I don't know about MMAT. I've not had time to really research why it did what it did. I know it has something to do with probably the merger that happened in this time frame, and I know there was a bunch of shorts interest that basically got carried over into the merger. But like everyone was like, "Oh well, it just seems weird." Like, but they have covered some, is what it looks like. I've been in positions where the split was premature given by management, and it's a disaster. I mean, it can be, yeah. I mean, luckily, I haven't had a ton of positions that have dealt with that, but like, if you want to tell everyone that what's happened, I'm happy to listen. I mean, can you give me an example of like a stock that announced too early and then ended up like dumping because of that? Obviously. Yeah, I don't. Maybe you're just typing it out. Because I'm going to be probably going soon. I don't have a like specific. I know Asma, you probably have some questions on that. I will try to look into it. I just haven't had a ton of time because of work. I'm hoping once the weather kind of cools down, I will be back in the office more, and so I'll have like 8-hour days inside the office, where I can actually do this full time again. But meaning they were forced by the rules and did a split, but it went from like $3 to 40 cents in a month. Hey Anon, Liquidizer says, "Hey Anon, so the management wouldn't lie if they didn't believe ATER couldn't be profitable in 2023, right? I mean, how is their track record on keeping their word? I mean, they tell you inside every single call that any future guidance is obviously like their own opinion and things can change, so like they can't guarantee everything they say is correct. um so I don't it's their job basically to make sure that the company stays running, right? So they do have a path to profitability, but it's if they execute the plan right and the market goes the way that they think, which is that if consumer sentiment kind of remains around the same level right now and the market doesn't completely just crap all over itself, then and then send us into a deep recession where people aren't buying things anymore, then obviously they're not going to be able to execute on that plan, because that would be something external of their plan that they then have to deal with. So is that a possibility? Sure. Like, we can go into a recession and then all this stuff becomes a lot harder, right? And they'll probably have to, we'll go over the worst case scenario, right? Yeah, I don't think they were expecting to be profitable at all, like in 2022. Like, I think they might have thought that before COVID happened, but this is pushed back. They set themselves up for a rough go, because basically what ended up happening was, when the shipping containers went like 4 or 5x, they've had to dilute the stock now like 4x, and they've had like just cash flow issues and things that they just never anticipated. They're getting through most of that at this point, it sounds like, but the stock's now valued right where it should be. So once again, I don't think at this point right now you're going to see a ton of movement. It will be probably like muted movement on ATER for a while, until they kind of figure out what's going on with this thing, and where, if all of a sudden the economy reverses, and that can be also geopolitical. So there's stuff to watch there. But as these things go back and forth, we're going to find out more and more what's going to go on long term. We need to find out what the Fed's going to do. There's all sorts of there's just all these pieces of the puzzle. So basically, I think at this point, I think the smartest thing for most people to do is this. You can knee jerk now if you want to, and you can get out. That's what some people are going to do. For me, I'm just kind of looking at this like, okay, so they said this could be profitable by 2023, third quarter. That's typically, he said second and third quarter are their strongest quarters typically. So, I mean, you can always reanalyze things in the second quarter going into the third quarter, and just see where the company's at that point. But this becomes more of a long-term, just, buy, hold, average down at that point. Because I think there's not much of a squeeze element at this point, unless they reverse and they actually start becoming profitable, and then all of a sudden shorts have to close, and then you might see a pretty rapid movement on the stock that could send you up to 4 or 5 instantaneously, to close out 7-8 million shares, depending on what they are. That would send the stock probably up to at least 5 to 7, or sorry, 4 or 5. Like, easily send it up to that if they had to cover all those at once. Yeah. Sorry, I'm getting tired. All right, let's see. AMC squeeze, says Dave, to 120 plus soon. Right where it should be. You said before it will probably get to at least 325 with the warrants. Yeah, I mean, it probably will. It will probably get to slightly above that at some point. It's just a matter of, right now, you've got to look at this stock like this. They can push it up on warrants. That's one route. The other route is the company turns around and actually starts showing signs of life, which means that shorts start covering the rest of the stock that they've shorted, and it sends the price up like that. Or this, just some institutions start buying, and all of a sudden the stock's closing gaps up here and is more in this range. And then at that point, if the economy turns around and things go well, you could see a nice run up again. You have to remember now that the float is different now, though. But yeah, Dave, the warrants didn't go anywhere. They still have like a quarter of the shares available to them for armistice at like $190, and I think, sorry, $2 and like $3.20. So there's a whole bunch of warrants that they can unlock. So I would, at some point, they're going to tap into them, is my guess. Whether or not it's just basically, they know they can run it up, so they just will. If they need some extra cash, say they're having a down quarter, they went the wrong way on a trade, they can always just pump a small cap like Aterian, make a couple million off of it, and then, get out. So, all right. I think we're going to get off, guys. If you guys have any questions for me, go ahead and shoot them in the Discord. If you are just joining us and you want to join the Discord, it's free. I'll put the link in here. No. You're fine, Dave. The warrants are still there. People have just been basically talking about like the long-term viability of the company, and at some point those warrants will probably be used to get pumped. Whether or not it's in the next couple weeks or the next year, I don't know. But if you're patient, they will probably be used at some point, because I can't imagine Armistice not doing what they already did last time, which is unloading all their shares and then doing it again if they wanted to, because it seems like they have some sort of relationship with Aterian. All right. You guys have a great evening, and I will talk to you tomorrow. Have a good one, guys.